What's up? What's up? What's up, everyone? How you guys doing today? Happy Monday. Monday fun day. Hey, my name is Jeremiah Davis, aka the Funding Coach, coming to you from Business Funding Now, Monday Fun Day, where I'm providing business funding tips. Okay, and today is, or to tell you, today's topic is the SBA business loan right for your business? Because I'm getting a lot of people asking about SBA loans, right? I'm furnishing more SBA loans currently or recently than I have been in the past. So it's seems like there's a wave. A lot of people want to get into the SBA, and quite frankly, you should want to get an SBA loan. An SBA loan is the lowest cost uh, funding that you can get in America. Okay, so but finding the right SBA loan that fits your needs and that you can qualify for, that's the tricky part. Okay, so I'm going to give you guys some tips on how to figure out what SBA loan might be good for you or good for your clients, as well as some generalized criteria on an SBA loan. Now, remember that the SBA, which stands for Small Business Administration, does not lend money. Okay, what they do is guarantee the money that a SBA approved lender can provide you, and they generally guarantee a percentage of the total loan amount. It's not always about it's not always going to be 100% guaranteed by the SBA, right? So I'm going to cover some of that here with you today, how much the SBA is going to guarantee, as well as how the process works in a general format, right? First, you have to go get to an SBA lender, and then they have their own underwriting criteria that they will approve an SBA loan, right? And then, but when they submit the package, they submit it to the SBA, and the SBA has to approve it. If the SBA approves it, and then those conditions come out, like the SBA say, yes, we'll approve this particular loan, we will guarantee 40% of the loan. And the bank says, okay, we can work with that. We're going to guarantee, we're going to go ahead and take the risk on 50% of the loan. And depending on the type of loan, you might have to come up with 10%, sometimes 20%. But there are some with 0% that you have to come out of pocket with. Just have to be the right circumstances. It's very nuanced, and traditionally it takes at least 3 to 6 months average to from beginning and end to get an SBA loan and get it closed and money in hand. There are a few express services out there, SBA loan lenders that will, do the package and close within about 30 to 45 days. But that's a high bar. You have to have all your ducks in a row and on time. So let's first talk about the different types of SBA loan, because there's more than one. There's more than two. There's actually 9 different types of SBA loans. Okay, so that's how many people knew that, right? How many people knew that there are 9 different SBA loans, and all have a different purpose and a different set of criteria or requirements as well. So I'm going to cover some of these. I'm going to do, hit it and quit it in about 30 minutes here. We're going to talk about the different types of SBA loans. Okay, so some of you might be familiar with what's called the SBA 7A loan. A 7A loan is for general business needs, right? It's kind of an umbrella that encompasses a number of different business needs that you can use for equipment, expansion, longer payment terms. I mean, it's like you can use this to buy equipment, you can use this to buy products, you can use it to buy facilities, you can buy, or real estate types, things like that. So there's a wide range of different general business needs that you can use the SBA loan. I guess the appropriate term would be just working capital, right? Working capital encompasses all the daily expenses in a business for a period of time. So that's if you just don't have a particular criteria, but I'm going to cover these other ones as well so you can kind of narrow down which SBA loan will be right for you or for your client. Okay, so the first one is the SBA 7A, general business needs, and loans as high as up to $5 million. Okay, $5 million. So SBA 7A, general business needs, up to $5 million. Okay, you wrote that down, you got that? Okay, good. Now the second one is called the SBA Express loan. This is a quick, fast, down and dirty loan. If you can get it, that's that 30 to 45-day period. That's quick for the SBA. Okay, that's quick. All right. Usually, when a lender submits an SBA package to the SBA, the SBA is going to take about 7 to 10 days on average to review it and approve it or deny it to that SBA approved lender. Now, that could vary. We know how the government is, right? The SBA is a government agency, so the red tape and the bureaucracy is going to come in with that. So if it takes longer, it takes longer, and you don't have a choice. Okay. All right. Now, another caveat: these SBA Express loans only go up to $350,000, right? And this is more for a fast cash infusion into a business to service a need that the business has, right? You don't need a whole lot, like, well, $350,000 is a lot of money, but for medium and small businesses, it could be a monthly revenue, could be your 6 month or annual revenue. Just depends. All right. But the point being is explore the SBA Express loan for up to $350,000 for fast, quick turnaround time. Okay. So you got SBA Express loans, we got SBA 7A loans, right? We got those two. Okay. The next one is called the SBA 504 loan. Now, this one is particular for larger investments and expansions to purchase fixed assets like real estate and equipment. Okay, so and these loans range from $125,000 up to $20 million, right? So, like if you wanted to buy a manufacturing facility, then this is the type of loan you might want to look into. And it's a larger investment, right? For all these SBA loans, you're looking at anywhere from, on average, 10 to 20 year payment term. Okay, on a case by case basis, it could be less than 10 years, but generally it's going to be a minimum of 10 to 20, maybe even 30 years. Okay, for a large loan like that. Okay, so and that is used for large investments and expansions. Right, you need a second location. You want to buy a building and can renovate it and put your business in there, or a second office or second location, something like that. That's what this type of loan would be for. Okay. Now, I actually got a call today about this next one, which is called the SBA micro loans. Right. Now, these are small, short-term need loans, suitable for small businesses or startups that need limited funds. You just need like maybe 25,000. As a matter of fact, I think these cap out at 50,000. So the max on a micro loan is 50,000. I'm 99% sure about that. But a micro loan. But here's the caveat with those. Those microloans are provided by local credit unions and banks that are connected with a local business development organization. All right, there's a number of these different organizations where you can go and get free help and advice and training on how to start and operate and run a business. And usually these microloans will come with that contingency that if you get approved for this loan, that you will have to attend these classes or get this training as a condition of the loan. Okay, so that's it's good, right? But this is also a longer period of time to even get qualified and receive the money. Some of these local entities might require you to take the course for 3 or 4 or 6 months, whatever it is, right, before they even give you the loan. Okay, but another benefit of it is it's more ideal for those who have credit challenges, right? Most of these other SBA loans, you have to have at least a 650, 680 credit score minimum, right? Where the micro loans, you can go down maybe 600, 620. You got to understand that the actual lending institution sets the criteria, not so much the SBA, right? The SBA is just saying, is this worth us taking a risk and guaranteeing a portion of the loan? So that's what they're approving, right? But that comes with the conjunction or a caveat that the lender is going to approve you too. So you're looking at two approval process based on the lender and the SBA. Okay, so and these are generally these are for startup or small businesses for giving some working capital to buy inventory or to buy products or things like that so they can get their business going or increase their business revenue or things like that, or even for startups. Sometimes these are used for startup businesses that you can apply for these. And a lot of these local agencies also offer grants for small businesses or a um, um, entrepreneurs starting a business or already have an operating business. So you want to look into your local business development organizations to see which one of those offer the SBA microloans and what their conditions are to extend these type of loans. Okay, so we went through SBA 7A, SBA Express loans, SBA 504 loans, SBA microloans. Now the next one's called SBA disaster loan. Now, most of us know that this was widely used through the pandemic, right? Which we all know businesses, local small businesses were top priority for the government, for the economy to keep the economy going. Okay. But these are also available all the time, right? If you're in an area that gets hit or devastated by a natural disaster, then you want to look into the SBA disaster loan because this is just not for COVID. This is for ongoing, hurricanes, typhoons, tornadoes, things like that, fires, wildfires. So any disaster, natural disaster that says wiped your business out or damaged your business significantly, you might want to look into an SBA disaster loan. Right, it's for immediate expenses and continued operation of the business. So these have a quick turnaround time as well. All right. Then we have your SBA community advantage loans, businesses in underserved markets, the urban area, right? The urban areas of our cities where if you have a business or you or want to start a business in one of these areas, then the SBA has a special program for you and to get access to monies to infuse business in the inner city or the underserved, as they saw, underserved market areas, businesses in underserved market areas. Okay, so you can read between the lines what that means. But point being is, if you are in a large city, like I'm from Chicago, so I would say South Side Chicago, West Side Chicago are more likely to fall into this underserved market areas than the East Side or the North Side of Chicago. So, if you're living in New York or you're living in, I live in Tampa now, so there's an area that my ideal for that, or South Tampa or South St. Petersburg, Dallas, whatever city you're looking at, the underserved area or the area where there's a lot of uh, underserved community residents. Let me just say it like that and leave it alone. Okay. All right. And then we have and those the disaster loan and the community advantage loans are the amount varies, but I wouldn't imagine it would go over up to maybe 500,000 at max. Okay, and then we have your SBA export working capital loans. Now, this is for international businesses. So you're supporting international sales, right? You're exporting export financing, short-term working capital. So if you got a lot of products that you're shipping overseas and selling to those different markets and different countries, then you might want to look at an SBA export working capital loan for international sales. Okay, and those generally they can go anywhere from a couple 100,000 to probably about 3.5 million, something like that, maybe 5 million tops. Just depends on the scenario, right? But here's the thing: if you're in a business that needs more than that, there are other loans that go up, right? So you might want to come back and look at the SBA, 504, where it goes up to 20 million, or you look at SBA 7A, where it goes up to 5 million. If you need more than that, then you're gonna have to look at some different other types of loans. Okay. Um, let's see where we're at. Next one is your SBA Export Express loan. All right. So the previous one was working capital, SBA Export Working Capital. Now we have SBA Export Express loan. Now this is the same type of loan, but it's only up to 500,000. It's for quick funding for export operations. Okay, quick approval, short-term arrangement, or term or payback. So that these are all for businesses that have international sales transactions, supplying a product to overseas markets. Okay. All right. And then we have your SBA international trade loans. And this is a larger type of loan that supports international trade. So, like a Fortune 500 company, or maybe you're in a business, maybe you're making widgets, and now you got a demand for your widgets in the European countries or the Asian countries or the whatever, I don't know, South America, who knows, right? But it's international trade loans, right? And these usually come with large limits to, could be multi-million dollars, 10, 15, $20 million international trade deals that you need a large loan to produce a product or service and deliver it to the international market. So it's broad in financial support, and it's promote global competitiveness. Okay, so you're competing on a global scale rather than a local, state, region, or even in the continental United States. So that's the type of loan you might be looking into for if you're in that type of business. Okay, so now having said that, right? I'm trying to give you some guidelines that are more universal than precise, because the business funding arena, it varies case by case. Every business owner, every business, right? I don't care. You can have two business owners the same age, similar, credit, similar revenue. They're just going to find different nuances for each one. Okay, so I try to stay away from trying to give you like, oh, this is it, black and white, because then you're going to go back and say, well, you said if I did this and this, I'm going to get the loan. It's not like that. You got to have all your ducks in a row. I mean, typically you're going to need to have your business plan ready. You're going to need to have at least a 2, 3, 4, 5 year, maybe 10-year projections of the business. You're going to have to explain why your business is better than the guy down the street that's doing the same thing. Why are people going to come to yours versus your nearest competition? Okay, you're going to have a solid plan, as well as all your personal and business finances in order, because they're going to do credit check. They're going to check your personal statement. You're going to have a personal financial statement. You're going to have a business financial statement. And then if you got partners, every owner of the business that has more than 20% equity is going to have that personal financial statement and a business financial statement and good personal credit. Okay. The only one that's really not contingent on personal credit is the microloans, where you're getting that from your local community. Okay. Which it does have some credit period, but it's a lesser um, threshold to meet that than these other bigger type loans. Okay. So in general, be prepared to get a business plan, right? Get some projections of anticipated sales, right? Try to calculate how much revenue, if you borrow this money, how much that money is going to be able to um, generate more revenue to pay the loan back, as well as give you the revenue or cash flow that you need to continue operating once you pay the loan back. Okay, so you got to take up all those nuances. Okay, and some of you guys might know, may not know, right? I just dropped a course a few weeks ago, the Business Funding Expert Certification course, where I cover, I think, 4 or 5 of these loans in that course. But I'm actually going to do another course of nothing but SBA loans. Okay, where I'm going to provide a lot more detail on these different types of loans. Okay, so I can read you a short descriptor on some of these and give you a general idea of what we're looking at, right? So we're talking about the SBA 7A loan program. It's gained immense popularity among entrepreneurs due to this flexibility and range of applications, whether it's working capital, business expansion, equipment purchase, or property acquisition. These loans can cover it all. So that's why I say the 7A is a broad application. They allow a maximum loan amount up to $5 million, and they provide an extended repayment period of up to 25 years. Easing into the financial burden of a small business. So easing the financial burden of a small business. So if you're looking, for more general funding, this is the one. But you must have, I'm telling you, you're going to have at least a 680 credit score. At least. You're going to have your DTI under 40%. You're going to have each of your trade lines under 40% utilization. Get them down to under 30%, maybe even 15%, whatever. The better your credit looks, the better your financial blueprint looks. Now, also, some of these larger loans do require collateral. Okay, I think it's up to. I'm not going to misquote. I'm trying to remember. There's a certain threshold. It might be 50,000. It might be 100 and 150,000, something like that. But there's only so much you can get without collateral. And then after that, you will need to secure the loan or a percentage of the loan with some type of collateral, like your home or your land or maybe your real estate portfolio or things like that. So you definitely want to make sure you research that before you apply and invest a lot of time and energy into that. Okay, the SBA Express loan, unlike traditional SB 7A loan, are specifically designed to expedite the loan approval process. These are an ideal option for businesses, requiring immediate funding up to $350,000. See what I'm saying? They especially beneficial for businesses that have a strong credit history and need rapid access to capital. All right, this is where business credit comes in, right? If you've got a strong business credit profile, a strong personal credit profile, and have all your business finances and personal finances in order, this could be, that 30 to 45 turnaround time for up to $350,000. So that's what I'm talking about. Okay. Then we have your SBA 504. Are especially designed to finance the acquisition of fixed assets like real estate or equipment. They offer financial assistance for expansion, renovations, and new construction projects. So if you got a ground up project that you want to build and run your business out of, maybe it's a restaurant, maybe it's a franchise, maybe it's just an event hall where you'll have events and things like that. I mean, there's a wide range of things you can do with that, but it's for that particular purpose, right? Expansion, renovation, and new construction. Okay, And we're looking at loans amounts from $125,000 up to $20 million. Got it? Got it. Okay. All right. Then you got your SBA micro loans. Serve as a perfect financial solution for small businesses that need smaller amounts of funding, usually used for working capital or inventory purposes. These small short-term loans are best suited for businesses with strong credit profiles, which need only a limited amount of funding to support their operation. That's that micro stuff, the local, the local business development organizations and lenders, right? Credit unions and banks that will extend these smaller loans to small business owners in their community. Okay. Then you have the SBA disaster loan. In times of severe upheaval due to disasters, businesses often face emergency challenges. The SBA disaster loan emerges as a valuable resource for financial relief in these trying circumstances. Okay, so you're looking at any type of disaster. All right, there you go. Then we have your SBA Community Advantage loans, right? Serve a critical role in empowering business operations in underserved markets. They provide an economic boost to these businesses by offering financial support for a broad range of needs, whether it's securing working capital to meet immediate operation expenses, purchasing necessary equipment to enhance productivity, funding expansions, incentivizing growth, investing in property. These loans will come with the flexibility to serve as a multitude of business needs in these communities, underserved market areas. Okay, the SBA Express Working Capital Loan. If your small business is eager to expand its footprint in an international market, the SBA Express Export Working Capital Loans can be a vital source of funding. All right, you got to be ready to expand in the international market, right? And then we have the SBA Export Express Loan, right? SBA Export Working Capital, SBA Export Express Loan. Just make sure you understand there's two different loans. For businesses keen on expanding their operations by exporting goods and services, the SBA Export Express loans can provide a highly beneficial or can be highly beneficial. These loans are designed to provide quick access to funding up to $500,000, enabling business to seize international opportunities swiftly. Okay, these are short-term loans with a maximum duration of 12 months. Remember that one. And then we have the SBA International Trade Loans, are designed to boost businesses' activity involved in international trade. They offer broad financial support, allowing businesses to cover a wide range of expenses, including but not limited to securing working capital, financing exports, and purchasing necessary equipment and real estate. These loans are instrumental in enabling businesses to seize global opportunities, leading to increased competitiveness and profitability in the international market. All right. So, wow, that was a lot. Anyway, listen, if you don't have the course, go get the course because it's not going to be what it is right now, right? Right now, I dropped the price because, it seemed like a lot of us are struggling with the summer and in between the holidays. If you want to get into the funding, you want to learn more about funding, I got 30 different business loans and the business funding expert certification course, right? Each 30 different type of loans, and each loan you're going to get a descriptor of the loan. You're going to get a case study of the loan, how to apply it in a real life scenario. You're going to get the pros and cons of the loan. You're going to get the requirements of the loan and a list of supporting documents of the loan. All right. And then you're also going to get my 5-question formula to pre-qualify any business, right? I ask 5 questions and I already know which loan they're going to go with. And I put that in the course. All right. Each course, each loan has a 5-question quiz after that you can take as many times as you want. I want you to score 100 on those quizzes because those same quiz questions are what the final exam encompasses. Okay. So there's no time limit. Take the quizzes Get 100. When you're ready, you have 3 chances to get 75% or higher on the final exam and a 2-hour time limit, right? If you score 75 on the first go round, you'll automatically get emailed your certification as well as the ebook with all the content from the course. Okay, so you'll have a reference guide for those 30 different loan products. All right. And then I'm guaranteeing that if you can submit a deal with all the terms and conditions in the course, you submit a deal within 30 days of purchase and you work with me, I'm guaranteeing you're going to make your money back, right? And at $500, the first deal is going to be easily $2,000, $3,000, $4,000, depends on the amount of the funding. But you're going to work with me one-on-one to close your first funding deal if you purchase the course and submit a deal that gets approved and qualifies within the first 30 days. Okay, but easily you're going to make your money back because I'm gonna work with you. I'm going to use my lenders. I'm going to educate you. I'm going to show you how to do it in the end. Now, if you want to continue working with me after that, that's totally fine. If not, you can go out there and find your own lenders. I also put in the course the pros and cons of working with a loan broker versus working with direct lenders. There are benefits working with loan brokers. There are also cons for working with loan brokers. But there are also benefits to working with direct lenders, and there's cons. The number one thing I always tell people is that it's personal preference, right? Who you work with as far as a direct lender or broker is your personal preference, right? The benefit of working with direct lenders is you can have direct access to the lender and you make more commission, point blank. But one of the cons is these direct lenders only do one or two different type of loan products. So you'll need a larger direct lender Rolodex for a wide range of loan products. Working with a broker, you might make less commission, but usually the brokers already have the relationships with the lenders that are ideal to get a multitude of loans done, like I do, right? I'm a loan broker and I have a Rolodex for about 300 different lenders for a wide range of different funding products. I mean, really a wide range of different funding products. So, yeah, you're not going to make 100% commission because you got to split that up. But with me, I'm going to pay you so much, right? It's all about the workload, right? You just funnel the deals to me and I'll do the rest. Then you make some commission. If you manage your client, you make a little bit more commission. So it just comes down to how you want to work, how you want to structure your business or providing loans. Okay, question. Hey, thanks. How you doing, Miss Singleton? I see you. Can you have multiple SBA loans at once? Not likely. Not likely because I'm assessing your debt to income ratio, right? Your how can you service the debt? They're not going to give you more than one SBA loan if you're already strapped, right? Getting one is hard enough. Getting two is really hard, right? And then it brings the question, why do you need two? Now, there's nothing saying that you can't apply for two different types of SBA loans, but they're going to be taking a real hard look at all your finances, business and personal. All right. And the larger the loan is, the more collateral you have to come up with. Remember, the SBA is not the lender. They're just guaranteeing a portion of the loan to the lender. So if you default, that lender has some security in getting their money back or a portion of their money back, right? A lot of times they want to see that you got some skin in the game, so you might have to come with 10 to 20% down, and then the SBA is going to, say do the say 40% I guarantee. The lender is going to loan you the 80%, but they're only going to risk 40% because the SBA is guaranteeing the other 40%. So those are some really nuanced things that you need to look into and make sure, or just call me and I'll work with you. I can do SBA loans, all of them, and yes, I'm going to guide you. And my whole thing is, if I need to make sure you're qualified before we apply. So I'm going to make sure you qualify or your client qualifies for the SBA loan that they're most likely to get or the most easier to get for them before we apply. All right, I work with some direct banks that do furnish SBA loans, and with those direct banks, I don't make any money from the bank. So we have a service agreement that I usually charge 10% of the loan amount that we would work out, as far as an affiliate thing. But and then once the deal is closed, then I get my invoices paid for the 10%. Okay, and that can vary. If it's a couple of $1 million, it might be less than 10%. Maybe 5%, something like that. It's hypothetical. We'll see when we get there how many different what we're working with. But the most important part is making sure you have the accurate information so you can notify yourself or your client on what they need to accomplish before they submit a loan package, because that's where most people fail. They don't even know what the requirements are. I guarantee you're going to need a business plan. I guarantee you're going to need your personal financial statement, your business financial statement. You're going to need at least 2 to 3 years of your business finances, tax returns, bank statements, P&L, balance sheets. All right, you're going to have a 680 credit score. You're going to have your DTI all across the board, business and personal, under a certain amount. They were looking to see if you got the resources to service the debt. You got to be able to service the debt. If you can't afford it, you're not getting approved for it. All right. The best way to get the gauge that you're going to get approved, if you can afford the debt, is by seeing your finances, seeing how many bills you got, how many, what kind of collateral you got, what type of what liquidity that you have you can use a wide range of different things for collateral, but most common things they want to see is land, homes, houses, real estate portfolios, things like that, where they know what the value is and they have a recourse to recoup their money if you were able to unpay that debt. Okay. Let's see. Give you a few examples, circumstances that qualifies a community as under served places. Actually, there's a map that you can Google, and for any city, they will pull up the underserved area, right? So you go to, I think maybe economic development or SBA, Google it and looking for underserved market areas, and you should put up a list of cities, and in that city, it will have a digital map, and they will have color coded on the underserved market areas. Quite frankly, it's usually the ghetto. Okay, it's usually the rough part of town. Okay, that are underserved, right? But this is a thing that the government, the White House, came down with that said, hey, we want to inject businesses and we want to inspire entrepreneurship in underserved communities to boost that community up economically, right? Because that's the problem, right? They create small businesses, create jobs, they create revenue, all those things that come along with entrepreneurship and fueling the economy of that area or that community is how they're assessing this, right? So say, having a fresh food, produce store in an underserved area is a win-win, because we already know that it's hard for those areas, or there's very difficult to get fresh produce or fresh healthy food in underserved areas. So they would probably likely say, okay, we're going to help you and build this business in this area because it's underserved and you're serving a need for the community, and you're going to provide at least a few jobs in the community, things like that. So underserved, market area is usually the rougher part of town where there's a lack of jobs, maybe a lack of healthy options, a lack of resources. We don't. I'm not going to get into politics of that. Okay. Thank you. Thank you very much. I told you it's there. All right. Anyway, you guys, I want to thank you for watching. Listen, go check out the course. Check it out. You can go to businessfundingnow.com. Go, hey guys, Mark or Win or one of my staff members, not Win, sorry, Neil, one of you guys, post the link. Never mind. I got it right here. I'm doing the most. Okay, I'm gonna post a link to the certification course. That's the landing page. Once you click on that, you'll see the landing page and a video of me telling you about the course. and then you'll have the um, that was weird. Let me see something. Nope. Go to businessfundingnow.com, and then you'll click on the second tab that says Business Funding Expert Certification Course. I'm going to post the website here. I don't know, sometimes you copy and paste them and gives you a bunch of garble book code stuff. I don't know what that is. Anyway, yes, please do. Thank you. Thank you. It's a really good course, and there's no other course out there like it. I mean, literally, you can buy some real estate courses. You can buy some, equipment type course. I mean, I looked for a long time to find any other resources to help me, expand my knowledge base, and I didn't find anything not like what I created. I mean, 30 different business loan types in one course. Okay, and then I painstakingly, designed the description of the loan product so you have a clear understanding of what that loan is, and then as well as develop that case study of how to apply the loan with the right client. Right, they got to match the loan with the client. You can't put every client into the same type of loan. So there's multiple different types of loans, and this is not even all. This is just the 30 of the most common types of loans. There's more. There's more business funding opportunities out there. I'm probably going to drop another course in the next couple of months on all real estate type of loans. There's probably a dozen different types of real estate loans, right? We got 9 different SBA loans. So I'm gonna get nitty gritty. I'm gonna start rolling out some courses to better equip you guys to understand and navigate through the business funding arena, right? And quite frankly, um, it'd be great if you partner with me and you have a steady flow of leads and I can work these deals for you and get you, and we'll do profit sharing. I mean, it's very lucrative. I mean, when you're making anywhere from five to $10,000 on a loan, on a large loan, I mean, sometimes I'm making $35,000, $40,000 in commission off a loan. Yeah, exactly. So, but if you do 4 or 5 a month on the average commission, say $3,000 or $4,000, that's $15,000, $20,000 a month. I think I can live off that. You can live off that, and more than that, you're helping people, right? And our whole objective here at Business Funding Now is the way we do things. So when people come to us, we're always going to see what the immediate need is, right? Get them the stopgap funding right now, right? Which is most likely revenue-based funding. And then we're going to encourage them to enroll in our VIP business credit coaching course with the sole objective of building their business credit to get them qualified for the business term loan, get them qualified for the SBA loan or the corporate only financing or business lines of credit, right? And then and we want to do that within 3 to 6 months, right? We don't want you to be lollygagging around, but we want to get you to the point where I can take you and get a second round of funding with a low interest rates, monthly terms, longer period of time, and more money, right? If you can get a couple $100,000 in a business term loan or a business line of credit that you have access to anytime you need it. That's where we're trying to get the businesses going. I'm just not the regular average loan broker and just waiting for the quick buck. I want to help businesses succeed and last past the 5-year mark, right? Because they're ready and they have everything they need to get the funding or the credit that they need when they need it, and not scrambling in an emergency situation and don't have anything ready. That's not how you succeed in business. You have to be prepared for the unexpected, and having access to credit and capital whenever you need it is the number one thing that's going to determine if you stay in business more than 5 years or not. All right. Okay, that's my time, you guys. Catch me on Friday with Black Label, and like I say, like, follow, share, and we can all come up together. It's a team effort. Let's do this. All right, my name is Jeremiah Davis. I am the funding coach. Peace.